Lehman Brothers has filed for bankruptcy protection.
One of the worst days ever on Wall Street, with the Dow.
September 15, 2008 will go down as a historic.
It was 7 days that really shook the global financial capital to its core.
The volatility is going to continue.
Essentially ending the era of investment banks on Wall Street.
679 points.
Reflecting weaker economic conditions and higher prices for energy and food.
This administration will constantly strive to promote an ownership society in America. We want more people owning their own home.
Home ownership has always been at the core of the American dream. We've always believed putting people into their own home is a good thing, creates better values, creates a better society.
This has been something that's been going on for some time. The Clinton administration was also very eager to push for increased home ownership. So it was seen as a positive thing, and I'm sure it is, but as is the case with almost anything, when you take an idea too far, it can create excess.
There are a lot of things that led to the housing bubble. First off, a lot of politicians in Washington wanted more and more people to own homes. So they encourage entities like Fannie Mae and Freddie Mac to lend to riskier and riskier folks.
Fannie and Freddie, because they had the blessing of the government, or the perceived blessing of the government, they were able to write loans and underwrite mortgages at lower rates than other non-governmentally blessed suppliers of capital. Banks were trying to chase the profitability or chase on price what Fannie and Freddie did as a market leaders. And they had to find other ways to make money, and subprime mortgages for the time being were the way to do that.
So bankers figured out a way to bundle together mortgages, and so if a few of them weren't paid, it would be okay because most of them would be, and the banks didn't have to take all the risk for one mortgage. And then you could sell those and trade those little bundles back and forth.
Think of it like Wall Street as a giant sausage factory. And what people discovered is they were making all this sausage, but it was really poisoning people.
And of course, that's kind of the start of the story to our current economic crisis. And you've got a situation where the American dream meets economic unreality and major problems ensue.
In the early 2000s, as the economy slid into recession and after the terrorist attacks of September 11th, the Federal Reserve reduced short-term rates all the way down to 1%. On Wall Street, that's what they call easy money.
All the constraints on borrowing seem to have been out the window. Money was too cheap, money was too readily available, it was too easy to borrow money, and so everybody did it.
So this period of easy money, which really began in 2002, ran for a number of years, really through 2006 and deep into 2007.
And so the amount of borrowed money in the U.S., increased tremendously over those years. Anyone who, could sign his name to a piece of paper could get a $300,000 mortgage. And nobody really cared if they could pay it off because it was getting sold and sold and sold in different structures to different people who really didn't understand what they were buying.
Not only did this problem exist in households, but it happened on Wall Street. Investment banks depended increasingly on borrowed money to finance their own operations.
And what you witnessed was tremendous growth in the size of Wall Street, tremendous growth in leverage, or the debt that these companies put on their balance sheets.
And so they piled on debt. They got involved in instruments and securities that they didn't quite understand, but the pressure was so high to be able to get high returns and to do as well as the next guy that they just all followed suit without really examining closely what they were getting into.
Wall Street firms were becoming more sophisticated in learning how to do some of these things, became more sophisticated with computer modeling, modeling out the risk. And the market really exploded in size.
A lot of banks came up with the idea of how to manage and package risk. Probably one of the most innovative was in the late 1990s. J.P. Morgan began experimenting with what is called a credit default swap. This idea was basically you could buy insurance on the debt of another company. So if you felt that a company was going to go bust, you could buy a credit default swap so that if they went bust, you would get paid a certain amount of money, an insurance against their failure.
These are principles established really in the 18th century when shipping law, because they would used to have these parlors where people would bet on whether ships would come back or not. It was basically just gambling. This created, again, perverse incentives perhaps for ships not to come back, and there were these legendary stories about people sinking ships so their friends could collect on the insurance.
That's what's so disturbing and so amazing and really makes people angry, is something that started basically with lending, over-lending, that started in the banking system, broadly defined, with bankers selling stuff that turned out to blow up, has trickled down throughout. Again, it's the central role of the banks. When banks stop lending, the economy grinds to a halt.
So all the crisis bubbled around in the early part of 2008, but it really did not focus minds until the failure of the first investment bank, Bear Stearns.
JP Morgan Chase has agreed to buy cash-strapped Bear Stearns securities for $2 a share, or about $240 million.
They had to sell billions of dollars of bonds on the open market to raise cash. Suddenly their investors were saying, we want our money back, we're not comfortable anymore, and they basically ran out of cash. So that slow and painful death spiral of those two Bear Stearns hedge funds, I think, is widely regarded as one of the first major public signals of distress on Wall Street, and perhaps even in the economy as a whole, as we sort of rolled into this period of the credit crisis of 07 and 08.
It was the first of many such rescues that would take place over the ensuing several months.